the market bottom last month, the healthcare stocks have been leading higher. And you know what? Especially the managed care plays. See, first Bernie Sanders dropped out of the Democratic primary. No more Medicare for all worries. Then we started realizing that the pandemic might actually benefit these companies because so many elective procedures, those are not so good, are being postponed. Just look at Cramer Fave's Centene, which specializes in government-sponsored health care plans. Here's a stock that made a brand new 52-week high less than 2 weeks ago. But earlier today, the narrative got a little muddled. See, Centene just reported a confusing quarter, delivering a big revenue beat on top of a sizable earnings miss. The culprit, the company's health benefits ratio. That's the percent of premiums they spend covering claims. It was worse than anticipated. While management was able to raise their full-year revenue forecast, that's important, and maintain their earnings forecast, the quarter was seen as a negative development. Stock got hit. It's down by more than 5%. So what happened here? Well, in part, the confusion stems from Centene's giant acquisition of WellCare last quarter. The story's messier than it was 3 months ago. But messier, but not necessarily disappointing. We got to check this whole thing out. So why don't we go back to Michael Neidorff, the straight-shooting chairman and CEO of Centene, find out more about the quarter, where the company's headed. Mr. Neidorff, you staying safe out there?
We are, Jim. I hope you are, too. Safe and well.
Well, that's, I think, the most important thing, particularly for someone who has a company that now was with, 23 million people in America?
23. 1 out of every 15 American we cover.
Well, that's incredible. Can you tell people where you might have been, say, 5 years ago?
Or I think we maybe 10, 15, 20 billion, something like that. We're about 5 times bigger than we were then. So we'll do 100 billion, 112 billion this year. So it's probably around 20 billion.
So if you raise your revenue forecast, that's the number I'm focused on. There were a lot of people who were talking today about the idea that your medical loss ratio was not so good. People talked about WellCare. I'm thinking that this is all just part of a mosaic that's just not really finished yet. And when it comes together, it will look like, okay, let's call it UNH.
Well, you know, I want to tell you that what we delivered today was exactly what we told everybody we were going to deliver on March 3rd, when we talked about the combined forecast. We said that we would have a quarterly earnings adjusted somewhere in the high 80s, low 90s. We came in at 91 cents, less the 5 cents, which was the loss of interest income, which nobody could forecast. Our growth is up there. Our balance sheet's incredibly strong. A lot of liquidity in it. We're really well positioned for this. We're growing it. The business is growing. We're managing the medical management. We're meeting and taking care of the population that's really very vulnerable. And I'm just kind of proud of how the company's done. And we commented that we left the earnings as is until we get more definition. It's going to be choppy quarter to quarter.
But you're absolutely right. In March, I remember the only thing that had changed was that the Fed took rates down dramatically, which was not something anybody could foresee. Something else that no one could foresee, but you used the word. I'm proud of you that you used the word. You've been around. Like me, we've been around, okay? You said, look, we're at a depression level. You used the word depression. Everyone's afraid to use that word. But when you're at unemployment that could be as high as 20%, thank you for using the word that is operative here.
Thank you. But that's true. I mean, I studied economics. You get to 15, 20%, that is depression level unemployment.
So how do you get things back on track?
Well, I think, it will get back. I mean, I have a lot of confidence in the vitality and confidence in this country. But I think what we have to be prepared for, it's not going to be a normal return. It's going to be choppy. We could go into next year, if things do start to return to normal, and still have 7, 10% unemployment. It's going to take a while for things to come back. This is, I tell people experience is the sum of experiences. Nobody's ever had this kind of experience with a pandemic that hit this quick with the kind of ramifications it has. Until we have a vaccine, we're going to have no certainty, Jim.
Right. I think that is very true. I think people keep thinking that we'll be okay. I mean, if the NFL season will start, it'll be fine. I think the stands will be empty. We need all these different things. I mean, I'm sure you're advising everyone. Masks, physical distance. What do you think is key for staying healthy?
Oh, I think you need the physical distance. You need the mask. When you go back to work, you gotta do the temperature checking. There's a lot of things you have to do. But, and what we've said is all along that, look, you're not going to be able to measure it quarter to quarter.
Right.
You're going to have to look over the long haul and look at where you're tracking on the year. There could well be a second peak if people go back to work too soon, and they give up some of the principles that are helping to plateau it and see it come down. So we're in a very unusual time, Jim, and we're managing through it. We have the strength, the capabilities. We moved 66,000 people to work at home in 3 days. And this company is functioning today as well as it has ever functioned. We can't develop the people as well. We want to get them back home and back to the offices, but it's just incredible. We saw a capability that was just fantastic.
One last question. Are we opening correctly state by state, different ways? Some places hair salons and gyms. Some places we would never think of doing that. I mean, is it too random? Is it too dangerous?
Well, I think there's a lot of pressure to get things back in the small businesses. Here's my question that I keep asking people. If we opened up all of New York City tomorrow morning, said it, it's okay, open it up, and you could go out tomorrow night for dinner. I don't want to personalize it to you, but somebody could go out to dinner tomorrow night, and then would they want to go to a movie theater, a Broadway play, and sit in a crowded theater? I think, it's one thing to say we want to open it up. It's something else to start to get the momentum behind it that will improve the economy.
Right. I totally agree. I think a lot of people who feel that if you open it up, everybody will come out. And the fact is that we all know people who are sick. We all know people who've died. Well, I got to tell you, Michael, you put together an amazing company. I totally get what you were saying because you came here and you spoke in March. You did exactly what you said. You did exactly what you said you'd do.
We had a strong quarter and delivered on what we said we would do.
Absolutely right, and that's why the stock's a buy. That's Michael Neidorff, Chairman and CEO of Centene. Mad Money's back after the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.